All right, folks, welcome back. All right, so we're looking at the 15-minute time frame for NASDAQ September delivery contract for 2026. Everything's here from yesterday, except for these two lines. I just added that and this. Okay, so we have buy side imbalance, sell side inefficiency. I'd like to see it wilt below this low and then treat this as an inversion fair value gap. It can wick up in the upper half. I'd prefer it not do that. I'd actually prefer it not even touch the consequent encroachment once it takes that low out. And as I mentioned yesterday, it's sell side liquidity pool resting right there. Buy side imbalance, sell side efficiency creates that inefficiency that we've shaded in yesterday. So we only had two inefficiencies: major parent sell side liquidity, parent buy side. We had a minor buy side here and minor sell side. I left you yesterday with a follow up on the video I did yesterday morning. And I said that we had these relative equal lows. I'd like to see it trade down through that and build momentum, work below that low, which we've done, and we're about to potentially take out that low right before the opening. So I'd like to see it really lose ground and get heavy into the lower half of this. If it does that, I'm going to be content, because I mentioned yesterday in the first video, I said, I'm only really looking for this. It's kind of like a best case scenario. So knowing what you're looking for as a best case scenario versus what you can, I guess, reasonably frame for a low-hanging fruit objective, that's the difference. So this is low-hanging fruit objective. This is best case scenario. So if we're in a short, or if you ever take a short trade based on things like I'm teaching here, you want to take the bulk of your trade off here and then leave something on as a runner, like one or two contracts, to see if you can get below that. It's very fun when it unfolds. If it doesn't happen, once you have the bulk of your position taken off at your low-hanging fruit objective. Once again, Caleb's here. Got here earlier than he normally does, which is good. Did you sleep good last night? Pretty much, yeah. Good. I was getting ready to say something that's inappropriate. So anyway, I'm not going to pull any executions this morning. I just feel kind of fatigued. So we had this high here. I don't think that's a factor immediately right now. So I'm going to zoom in just in this area here with these levels. So this is kind of like the framework that I'm looking at. That like that. Okay, so smaller portion of that overall dealing range we identified yesterday. So we have about a minute and 15 seconds. So with these levels, just like we have here, we're going to drop down to a 1 minute time frame and watch everything happen from that perspective. We have inefficiency right here, minor buy side, relative equal highs. We have relative equal highs here too. So if we fail to drop, it may use this old inefficiency that we just showed on the 15-minute time frame. It doesn't look like it here, but this could be used in the first couple minutes, and we'll have to see what we get in regards to that. In other words, it could be using this right out the gate at 9:30 to run up here and take that out. If we take out this, I'm not interested in being a participant looking short for the morning session. Then it might have to be a afternoon session event. Small little inefficiency here. We just trade up into that. Again, we want to see it gravitate down to here. So far, a little bit of a knee-jerk reaction in there. Wait and see if we can get a first presented fair value gap. Drawing right up in that minor buy side, I said, in the inefficiency, and watch this area here. So 100 handles plus in the first 35 seconds of trading. So lots of volatility. So what I'm watching is I want to see if the bodies stay below this level here, and that would constitute a raid on that trailed buy stop. Anyone that was short able to place their stop here, they just got roasted. So if we get real heavy in here and wilt below that, again, we're just looking for this, and that'll be the end of the session this morning. It'd be nice to have a short little session because I'm actually kind of tired. See, oh, the volume balance, that's a suspension block. You nail the low of that. Bodies have stayed below this gap and below this high so far. So we'll see if it maintains that. So far, no gaps. See how the nice reaction off of that high here? It cleared it with no bodies left above that. And look at the bodies staying inside that gap that we gave in the 15-minute time frame. So any movement lower below this low should find momentum build up to get down into that inefficiency I outlined yesterday as a draw. So we'll have the full show of that range down there. Just touching the high of it is a moral victory in regards for someone it's like brand new. If they just watched the analysis yesterday and they want to see if it pans out, this would be enough to, you know, kind of like the winner circle type thing. Where it's at right now in respect to where it was, and what we were looking for is a reason to go up, to go down. That's also, you know, a victorious feeling, I'm sure, for a new student. So right now we're at event horizon between the low of this to the high of that inefficiency. Right there. Right there, we nailed it. So close below that would warrant further movement lower. For the folks that are wondering if I would have taken a short, where would I have taken it? As soon as it went above here and went lower, the next tap into that there, that's on that candle right about there is where I would have went in short. Because I'd be trying to work the lower half of this wick, trusting that the upper half has already done the damage. So it's just a little bit more, get down there and touch that gray box, and we pretty much time traveled yesterday. If it can't fulfill it on this candle here, it needs to be on the next one. So we close below consequent encroachment of the low of that fair value gap and the high of that fair value gap. Boom, there you go. Time travel must be a real thing now. That's pretty lucky, isn't it? Mm-hmm. Old man still got it. But you didn't short it. So anyway, I'm looking forward to this guy's video about me. He's going to expose me as a fraud.
Mm-hmm.
So
charlatan.
Yeah, we're gonna see what that's gonna look like too. The ones in the past, everyone else has done. It's been pretty much comedy, and I'm not expecting any less from this one. The young man's got a little bit of a record that if he marketed himself the right way and not went the Jerry Springer route, um, he probably could be making his impact on the industry a little bit better. But I like when they stand up and say they're going to knock me down,
Mhm.
and they ignore everything that's being shown in public. You never see them answering how it's happening and why it's working out so well. Why am I only picking one direction and it goes there? Why am I picking these specific levels and it delivers? Like, why is that? It's because my stuff works. My stuff is the market. So that's a very nice, handsome delivery. And let me screenshot this and share it amongst the folks back in 2026.
You're on your Marty McFly stuff.
Yeah. So anyway, very nice little reaction there. Completely random, I'm certain. This is first presented fair value gap. Okay, so we'll watch this in the PM session if it's staying close to it. And I think that'll be it for today. What's the close on this candlestick? 6.5, and the open is 6.75. So that is not a volume imbalance. So we have to use this wick to that candlestick's open because there's a volume imbalance there. And we'll go neutral on the color because I don't want to imply too much of a directional bias off of that. It's welcome to go lower, obviously. But what it's done here is sufficient enough. So we're going to pan back out to a 15-minute time frame. So that way people can really take in and bask in the ambiance of precision. So there's the sell side liquidity pool I told you yesterday. We were watching it live. I told you that Dad thought it was going to go right here and then wilt, go lower, and then work below this, draw down to this sell side liquidity pool and into this inefficiency. And we've done so rather handsomely here. If it wants to continue going lower, I'd like to see this become an inversion fair value gap, kind of like this is here. Notice how the body on this candlestick here, it went up and wicked, but it stayed in the lower portion and never did anything significant outside of that. So same type of thing. If lower prices are expected, it's the draw on that low right there. That's what we're looking for. But this should, if it's going to do so, it should act as a inversion fair value gap to lend weight to the marketplace down here. But in and of itself, this is perfect. There's nothing wrong with this where it's at. If someone was short, we'll screenshot that and share it to the folks out there so that they know everything I'm talking about is actually occurring and not dubbed over.
Replay.
What's this? Bulls. All right, bud. That was fun hanging out with you. I guess I'll see you when I see you again.
Absolutely.
All right, bud.